Nigeria moves from 115th to 110th best country for business in Forbes rating. African Export-Import Bank floats $30 million facility for small and medium enterprises in Africa. Manufacturing sector generates 31.48 billion naira value-added tax in the third quarter of 2018. Plus, Debt Management Office to service debts with 2.2 trillion naira. These and more on this episode of Business Express. I am Moplang Dakok. African Export-Import Bank, Afrexim, has signed an agreement with the African Guarantee Fund for a $30 million re-guarantee facility to support African small and medium enterprises, SMEs, in the trade value chain to access funds for their activities. A statement from the bank says the agreement provides for the facility to be used to support the financing needs of African SMEs by enhancing their access to long-term financing. This is to serve as catalyst to enable them to grow, create more jobs, sustain their existing labor force, and develop intra-African and extra-African trade. The facility is expected to support positive social economic changes among the more than 6,000 SMEs that are expected to gain access to guarantee loans from African local banks, thereby contributing to trade development, economic growth, and poverty reduction. In 2019, the Debt Management Office is expected to spend 2.2 trillion naira on debt servicing, and a significant portion of the amount will go to settling interest on both internal and external public debts. And with the 2019 proposed budget currently with the National Assembly, under the service-wide vote, 120 billion naira will be set aside for the sinking fund, which is created by periodically setting aside money for the gradual repayment of a debt or replacement of a wasting asset. This fund is considered very important by the federal government in paying off some of its mature bonds. The DMO hopes to spend 2.1 trillion naira on public debt charges, comprising of 1.7 trillion naira for interest on internal public debts and 433.7 billion naira on external public debts this year. The National Bureau of Statistics says in the third quarter of 2018, the manufacturing sector was a major contributor to internally generated revenue through value-added tax, generating 11.5% of the amount that came in for the government through VAT. Data from the Bureau indicates that other manufacturing sector generated the highest amount of VAT with 31.48 billion naira in the third quarter of 2018. The NBS said the sum of 273.50 billion naira was generated as VAT in the third quarter of 2018, as against 266.73 billion naira generated in the second quarter of 2018, and 269.79 billion naira in the first quarter of 2018, representing 2.54% increase quarter on quarter and 9.16% increase year on year. Similarly, The National Bureau of Statistics, NBS, says the revenue generated from value-added tax, VAT, from sectoral distribution from first to third quarter of 2018 was 808 billion naira. Sectoral distribution of value-added tax for second quarter and third quarter 2018 shows an increase in revenue generated from VAT during the year under review. VAT is a consumption tax placed on a product whenever value is added at each stage of the supply chain, from production to the point of sale. Nigeria's crude oil daily production recorded an upward swing of about 2.09 million barrels in 2018, translating to a 9% increment compared with the 2017 average daily production of 1.86 million barrels. Nigerian National Petroleum Corporation, NNPC, Group Managing Director Dr. Mekanti Baru said the nation had maintained a line of consistent year-on-year improvement. Dr. Baru also explained that the average production Nigerian Petroleum Development Company operated assets alone grew from an average of 108,000 of oil per day in 2017 to 165,000 in 2018. Describing the feat as the strongest production growth within the oil industry in recent times, the NNPC boss said Nigerian Petroleum Development Company equity production share, which stands at 172,000 barrels per day, representing about 8% of national daily production. To discuss more on the economic benefits, Nigeria's crude oil daily production, which recorded an upward swing of about 2.09 million barrels per day in 2018, we are joined in the studio by an economist, Professor Ken Ife.
Thank you very much.
Thank you for coming on the program.
Thank you.
Yes, so the price of oil has been dwindling. It's been plunging, although yesterday it went up slightly to about $54 per barrel. So what do you think is the reason for this continuous fall in the price of oil?
Well, there are many reasons. And it's a moving target anyway.
Okay.
You have the shale oil production in America,
Okay.
driving prices. But then they also respond to low prices. They start cutting down when the prices are low because it's a very high cost production. But then you also have OPEC trying to control price by agreeing to production costs, and then you have one of the big boys leaving to go and do their own thing by the side. So it's a moving target, and of course you have the global tension between America and China. China is the biggest consumer from our own perspective, and India as well. And when they are likely to cut down because of the impact on industry, you're going to have to see is a moving target. So it could go up, it could go down. So that's what.
Okay. Talking about cuts in production, you know, OPEC said at the end of last year that producing countries are ready to or should cut down on oil production. However, we see that Nigeria's oil production increased, and even in the U.S., you know, there have been some increases. So what would you say?
No, but there will be a decrease in U.S. because, as I said, with the prices dropping, the shale oil producers are going to start dropping as well because there's financing implications. So, but the case is the Qatar's leaving OPEC is a big problem because by the side they have a plan to do 6 million barrels a day, whereas they were doing quite significantly less in the OPEC framework. So you don't know what they're going to do as soon as they get out. They might start implementing their plan. But the case of Nigeria is very interesting because it's good news to the budget that we're actually doing 9% increase yes. from 1.86 million barrels to 2.09, which is good news for the budget. And it's consistent with the economic recovery and growth plan because that has a projection of going from 2.3 million barrels to 2.5 by 2020. So the knock that the federal government was getting on its budgets of 2.3 doesn't hold anymore because there is evidence that the production volume is going up. So that is a big tick for the government.
So what about the prices?
No, we can't control the price. We can control production.
I'm talking about
but we can't control the price.
Nigeria pegging her the benchmark for crude oil at $60 per barrel in the budget.
But one thing you have to, it should be nominally below the market rate for crude, but it is a moving target. And at the time that budget was being formulated, June, July, remember the fiscal strategy paper and the medium-term expenditure paper, they had to go to the assembly. They had to. That was then. At that time, there was ceiling. The price was higher than the projected. But again, we shouldn't lose sleep on this because by the time it goes to the assembly process and the assembly will start massaging figures, we will be seeing where the right price would be. So, and as I said, it's a moving target. So I can't crucify government for putting the figure out there.
Okay.
But they have got the volume. Production volume is good.
Very important.
That's within our control. Okay. The price is not within our control.
Okay. You talked about Qatar's departure from OPEC.
Yes.
So do you see this affecting, global oil production?
Of course it will, because they were doing over less than 1 million, about 700,000 barrels. So they had this problem with Saudi Arabia, and you saw the humiliation that they suffered. So they were no longer pulling their weight within the OPEC, and they felt they just go because they had so much blockade led by Saudi Arabia because of the accusation that they were financing terrorism. So all of those impacted on, and they're a very influential member. So they now left with a big plan to do 6 million barrels. Now the impact of that, if they do pursue that plan, is that it will undermine OPEC's price stability. And push down price. That's the impact it's going to have. Okay. But you just have to wait and see.
All right. So there's a survey that says we're expecting $70 per barrel price for crude. Do you see that happening very soon?
Anything can happen because remember there's fragility in the Iran and anything can happen. You can't rule that out.
Okay. So what do you see as the possible outlook for the year 2019 when it comes
in terms of
oil and gas? For
the gas, we have good news in the gas actually,
yes.
Because this year we've actually got 3% increase in the gas production, and if you it's moved from 7.67 to about 7.9. And if you disaggregate it, break it down, you have certain proportion going for export, and then you have the reinjection. About 1.5 for consumption. Now the one for domestic consumption is projected to rise from 1.5 billion standard cubic feet to actually triple. That's the projection, and they're now very confident that it could reach 5, from 1.5 to 5 by 2020. The impact of it is that the energy production power could increase by 500%. So that is a fantastic news coming from NNPC, that the gas side is pulling up, as well as, of course, the production value. And they've just commissioned the FSPO, the floating storage. They've just commissioned that, and that has started production, 200,000 barrels a day. And even the national petroleum production side is also recording an increase from about 108,000 barrels a day to 160,000 barrels. So it's all good news coming from efficiency scrutiny and efficiency gains from NNPC. So let's give them a cheer and then hope that they will keep us happy over the election period.
Yeah.
So we see or we hear about the shaky nature of global economy, talking about US-China trade wars and so on. Do you see that taking any toll?
No, it will. It is
economy,
actually,
especially in 2019.
Now, it's already hitting many countries. Nigeria is holding out. The central bank is holding out. Okay. What it is that the Federal Reserve is raising interest rates, and there are attacks. Even the president himself is attacking them and saying to them, "You are raising it too fast, too soon," and all that. So they're under attack. But nevertheless, the fact that they're increasing the interest rates repeatedly is affecting investments everywhere, all over the world. Don't forget that over 60% of the world global debt are denominated in dollars. So the impact is India, Ghana, South Africa. They've all devalued their currency by anything between 10 and 15%. But Nigeria hasn't devalued that much. We're still holding out for good reasons, because there's so many impacts on the global scene that on Nigeria, for example. Apart from that, if you look at our investment flow, it's melting down a little bit. But the component of FDI is going up. So even though the portfolio investment are escaping, the other one is going up. So, but then there are other things that can impact, as you saw the global price of oil, and you've seen the production figures, industries are suffering in China and America. And so all of those are likely to have impact on us even before the end of the year. But CBN is doing a great job, to be honest with you.
Let's hope for a positive 2019. So away from oil, let's talk about the Forbes rating for Nigeria. The Forbes, Nigeria moved 5 places from 115th position on Forbes ease of doing business or rate of doing business to 110th. So what does this mean for
It's not government. Let's not confuse that with the World Bank ease of doing business, because it is not.
Yes,
Forbes has this thing they started last year. Is a secondary data. They are using so many data from the World Bank, the World Economic Forum, what's it called it again? Corruption perception. They brought a bundle of so many data and then massaged them and created this fictitious. I'm not happy with it. This fictitious thing that places South Africa #1 in the investment destination, and Nigeria is struggling somewhere around 10, 11. I don't know where. That is fraud. I tell you why.
Okay.
I mean, one is the secondary data. Two, it forgets the motive of businesses. The motive is profit maximization. So you must have an element of intervening businesses. Take 1,000 businesses in Nigeria, in Africa, and outside Africa, and ask them. Put those countries there and say, where would you want to go? There's nothing there that actually goes to actually interview business. Then secondly, it misses the element of profitability, return on investment. If you look, UNCTAD publishes countries that have high return on. In 2013, Nigeria was #1 with 35% return on investment. Now there's nothing there on return on investment, because in the end of the day, businesses choose where they go, and then once they manage to set themselves up in the way that it works for them, they generate their profit. Their profit is what is the motive. It's like saying hygiene factors and motivators. Hygiene is what is it that will make you comfortable, but it's not what will actually motivate you to achieve. So I really hotly contest that result, because I see it's fraud, because it's determined to, it's a distortion and an abstraction from the reality. The reality is Nigeria is the place everybody wants to do business. Reason, I give you one. South Africa is a mature economy. Absolutely no doubt about that, with a lot of infrastructure. But it's a mature economy in decline. And that's why South African businesses are coming into Nigeria to make profit. Nigeria is a huge, biggest economy with infrastructure deficit. People go there because they have high premium for investing where there's infrastructure deficit. So once you overcome the infrastructure problem, you generate your profit. And that's why they want to come to Nigeria. Everybody wants Nigeria.
So do we see more investors coming into Nigeria in 2019 to do business?
Of course they will, because the signals are there that this is a place to do business. We are likely, I can't guarantee that, but we are likely to sign the AFCTA agreement. We are leading in ECOWAS. All the signs are there, and we're a resource-rich country. Can you imagine small countries like Botswana and all that are ranked above Nigeria? Where is the resource? Where is it that attracting business? And they don't. There's no sector bias that, you know, manufacturing and service industry. There's no bias. So you cannot use the ranking for tourism to compare to industry. Nigeria has over 80% of the business manufacturers in this country are allowed to import their raw materials and are given forex to do that. And so why would they come here? And then they know they come to manufacture because they have a base of 200 million people who will buy them. They don't worry about borrowing the money to pay for the goods because we have resource-rich country. So, you know, I don't get it.
All right, thank you very much. We've been speaking with Professor Ken Ife. He is a professor of economics. Thank you very much for joining us.
Thank you very much.
Business Express. Moving on, the Japanese yen weakens but moves capped by global growth worries. Let's see how much the naira is exchanging for other international currencies. You're still watching Business Express, reaching you from the network service of the NTA. Remember to send us your feedback via email businessexpress@nta.gov.ng. You can also reach us on Twitter, and the handle is NTA News Now, and the hashtag BizX showing on your screen. The Nigerian stock market all-share index declined 0.43% to close Friday's session, 4th January 2019, at 30,638.90 basis points. 331 million shares valued at 1.7 billion naira were traded in 4,012 deals, while market capitalization stood at 11.4 trillion naira. Now, copper prices dropped to their lowest in 1.5 years. Details with Musa Abubakar.
African equities started Friday's session mixed with South Africa's JSE Africa Top 40, Tunisia's Tun Index posting gains, while Kenya's Nairobi SE20 and Ghana's GSE Composite started on a negative territory. Asian stocks were mostly higher on Friday as investors cheered development on the U.S.-China trade relations. China's Shanghai Composite gained 50.51 points to close 2,514.87. Hong Kong's Hang Seng Index climbed 2.24% to close 25,626.03, while Japan's Nikkei declined 2.26% at 19,561.96. European stocks opened higher with trade talks between U.S. and China underway. FTSE 100, German DAX, and France's CAC 40 all started on a positive note.
The Global Market Report ends this week's episode of the program. But before we go, remember to send us your feedback via email businessexpress@nta.gov.ng. You can also reach us on Twitter, and the handle is NTA News Now. And don't forget to use the hashtag BizX showing on your screen. I am Muplan Dakok saying let's do it again, same time next week, Monday. Do have a lovely weekend and keep thinking and doing business.